Equifax is now down approximately 30%, and it's coming down into that area where I would say that it's appropriately valued. And you guys already know what Warren Buffett says about great businesses like Equifax. If we can buy them at a fair price, it's worth buying. And so that's what I'm going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up, guys? And let's get right into this one because I find this a very interesting opportunity, as Equifax is a company that I've been watching for quite a long time. So you can see here that year-to-date Equifax at $208 as of the recording of this video is now down approximately 30%. In fact, it was down more than 30% earlier this month, but it just sort of creeped up and now it's coming back down again. And what's caused the share price to come down so much? Well, you can see here that this is the GS Housing Affordability Index. And effectively what happens is that the lower the chart goes, the lower affordability is. And right now, I believe that we are at record unaffordability. And as you can see from where that line chart ends, affordability is at a historic low point. But the question is, why does affordability for housing matter as it relates to Equifax? Well, you can see here that a third of their business is in the mortgage space, and then approximately 20% of their business is in the financial space. So what does that mean? Well, it means that if credit is not being checked because fewer and fewer people are buying homes, fewer and fewer people are taking out credit cards or loans, then of course their business declines. So you can see that their business is very leveraged to the economic health of the economy, mainly in the US. And as we all know, the economy is on the cusp of a recession. Some people are denying that it's in a recession. I don't know why, but it's very clear that the economy is going in the wrong direction. And so of course, Equifax's business could potentially be also going in the wrong direction, at least in the short term. Another reason why I believe that Equifax's share price is declining, or could potentially be, because they could be seeing political risk from a California Democrat, Maxine Waters, as she is pushing to get regulators to punish Equifax for issuing wrong credit scores for many consumers. So there's political risk involved in the business right now. Now, keep in mind, there's always political risk when you're running this type of business. So this is not anything new. But where exactly are their segments overall? Like, why does a US regulator going after them matter so much? Well, you can see here that the vast majority of their business is in the US. Now, this chart doesn't exactly show it, but from other work that I've done on this opportunity, I know that their international segment makes up only 1/5 of their revenue. So 80% of their revenues comes from the US alone. So that's why US politicians going after them matters. Now, just a reminder, once again, this is their vertical mix. I did show a similar chart to this previously, but once again, you can see that the mortgage business is 32% of the business overall, and then financial is 19%. So more than half of the business is related to just financial products, whether it be a mortgage or it be loans, credit cards, etc. Now let's dive into those three segments that I showed you just earlier. So diving into the workforce solutions, you can see that part of the workforce solution is they have 46% of the segment being mortgages. Now this is one that confused me a little bit because I would think that their US information solutions would be the segment that has all of the mortgage, but it looks like about half of this segment is also mortgages. And so you can see that a big part of this segment is corporate employer services, corporate talent solutions. So when your company that you're applying to or is looking to hire you runs a background check, there's the healthcare segment, the government segment. I would expect that auto would be larger, but it might just be in the other segment. Then you got financial and commercial here as well. You can see that this is the segment that they're looking to grow out the fastest. So they're looking to grow this segment at around 13 to 15%. So I don't think I'm going to forecast growth at 14% organically. I think I might forecast it closer to 10%, maybe around 12%, but I wouldn't go as high as 15%. And so that's where my valuation might be a little bit conservative relative to other people who are valuing this company. And you can see that revenue has been a bit choppy, but strong in the past 3 years for this segment. So in 2016, it grew 23.5%. In 2017, it grew 8%, 2018, 8%. And then of course, it went into the double digits in 2019, 2020, and 2021. Where does this go into the future? I don't really know, but you can see from my expectation, they're forecasting this segment to grow at approximately 13 to 15%. I'm forecasting it around approximately 12.5%. So guys, feel free to forecast this out higher if you'd like. Let me know what you're doing. Now, moving into their US information system segment, this is sort of their legacy business. This is where I would have expected all of the mortgage business to sit. So you can see this segment is actually lower on the mortgage side. So it's got 34% of the segments overall being mortgage. But notice, remember in the last segment, I said that I expected auto to be higher. So you can see that auto is much higher here, being 10% of the segment. Obviously, you expect financial to be large here as well. And so where do they see this segment going? Well, you can see that they expect the segment to grow at approximately 7%. And they're showing you how it gets there. 2% growth in the market over the long term, 1% for ID and fraud, 2% for cloud. I don't know if that's just savings to make it more profitable. Actually, that wouldn't be because this is revenue growth. So 2% coming from cloud. I'm assuming that's cloud businesses then. 2 to 3% is just pricing and penetration. So they're showing you how they're getting there. And so I'm more comfortable with this segment and the walk that they've provided. So I would forecast this to grow at approximately 7% a year. But you can see that growth in this segment has also been choppy. So in 2015, it grew at 8%. But in 2017, just 2 years later, it only grew at 2%. And then 2018, it actually went negative because the financial marketing services went down. So who knows which direction this segment goes? Forecasting at 7% could even be a stretch, but notice their 2020 and 2021. In both of those years, the segment grew considerably. And so I'm going to forecast out 7%, but I'm going to watch this segment like a hawk. Now, just a reminder that the mortgage solutions business is actually declining this year. So I forecasted that the mortgage solutions business and the financial marketing services business are both declining in the double digits. So that's what you can see in the 2022 forecast. So overall, I'm forecasting that the US information solutions business declines 7. And then thereafter, it grows at around 6.5% up until a ceiling of 7% out into 10 years from now. So that's how I'm forecasting this segment to grow. And then coming into the international segment, you can see that the financial services business is the largest part of this segment. And sort of what are they saying that this segment is going to grow at? Well, you can see that they've given us a pretty similar walk to what you saw for the US information system segment. And it's going to be expected to grow at approximately 7 to 9%. So I think forecasting around 8% for this segment is pretty reasonable. But notice that international is the biggest sort of like if factor because it's really choppy. So 2015, it was up 18%. 2016, it was up close to 40%. But then a couple of years later in 2019 and 2020, it was down. And then, of course, in 2021, it went up again. So it's really in the air which direction this segment goes. And right now, you can see that the international segment is trending to increase year over year. I'm forecasting it approximately to grow at 5% and then 8% thereafter into the medium to long term. And so the question is, how is the business doing overall year to date? Because they have reported 2 quarters thus far. Well, you can see here that total workforce solutions for the 6 months ended June 30th are up 27%, which makes a lot of sense because the hiring market is still strong, but this could turn around very quickly. So I have forecasted that this segment comes down in the back half of the year. Their information solutions segment is down 7%. And I'm forecasting that this segment comes down this year. And then their international business is up 4%. And I think that this overall, the international business will be up somewhere in the single digits area. But overall, I believe that revenue is going to be in that high single digits to low double digits growth rate in 2022. In fact, it could actually come down to the mid single digits. So it's all depends on how the back half of the year plays out. And none of us really know how that's going to happen because there's so many uncertainties that are coming about right now. We don't really know how to forecast the back half of 2022. But of course, I don't need to be the one that forecasts the back half of 2022. They actually do a really good job forecasting and showing us how they're getting there. So you can see here in fiscal year 2021, revenue was approximately $4.9 billion. Non-mortgage segments grew 19%, or their non-mortgage businesses grew 19%. And their mortgage businesses also grew 19%. But in 2022, notice that the non-mortgage businesses are only expected to grow approximately 16%, and the mortgage-related businesses are expected to decline 24%. Despite that, revenue is still expected to be up by approximately 4% to $5.1 billion. So that's how they're getting to their revenue growth estimate in 2022. And they also provide us with a walk. So this company's reporting or their estimations is phenomenal. I love the investor relations team here, but you can see that their core business is expected to grow around 14.5%. And then the acquisitions get them the other side of the way. And then, of course, they come down because FX related issues. Obviously, the US dollar is just stronger relative to other currencies right now, so it's going to be a sort of a headwind. But overall, they get to around a 3.6% revenue growth for the year, and that's exactly what I'm forecasting for them. And on the adjusted EPS guidance, they're basically in line with last year. And the reason why it's coming in line is because obviously that their depreciation amortization is up, higher interest expense, and of course that headwind as it relates to FX. Now, I do want to give you guys my valuation or where I think that this company should be trading at. But before I do that, just a reminder that approximately 80% of the viewers of this channel are not subscribed. So please, guys, if you can, please consider subscribing to the channel right now and hit that notification bell to be notified when more amazing videos are uploaded. All right, guys, now let's dive right into the valuation. So you can see here that on a free cash flow basis, I believe that free cash flow is the best way to value this company. I'm valuing the business at approximately $230 per share, but I'm penalizing them for the debt that they have on their balance sheet. So I have a net valuation of approximately $190 per share. Their current share price is around $200 per share. So I would argue that the business is currently fairly valued. But once again, Equifax is an amazing business. And so if you can get this at a fairly valued mark, it's not a bad opportunity at the moment. You know me, I tend to be very greedy in these situations, so I'm going to look at what the cash secured puts are offering. If I can get something around like a 15 or 20% cash secured put yield while simultaneously making my exercise price much lower than fairly valued, I'll go after that instead of just fairly valuing purchasing the company. And if you want to see the Equifax model that I just showed to you guys and any other model that the Patreons get access to, you can get access to that at the lower tier of the Patreon level. And of course, if you want to join us for an epic call every month, you can join us at the higher tier. Now also, guys, I just put out a really interesting video on David Einhorn's bet on Chemours Corporation. And so in order for you guys to see that video, click right here.